Hello and welcome to the Chilled Investor. This is not financial advice. Always do your own research. So today we're looking at Orchid Island Capital. Now these pay every month, and on dividend max they are quoting 18.2% yield. Some others are reporting 17.5%, but there or thereabouts the same. Now on the face of it this looks great, but when we take into account the yearly dividends and what actually happens to them, we can see that after 2014, as we're going to 2015, the dividend rate has actually dropped year on year, except for 2017 where it stayed the same. Now if you take the last 5 years for example and add those dividends together, it comes to just $5.28. So let's look at what would have happened to our investment if we'd have bought in at 2017. So in 2017 we're looking at over $10 a share, but let's say we bought it on a bit of a dip and we got it for $10 flat. We're looking, by today's date, we're looking at we've lost $7, and when you consider that you've only been paid $5.28 over the 5 years, and let's not forget the 15% withholding tax as it's a US share, you can see we're on a real loser here. And this represents a value trap where you hang on and hang on hoping for the price to go up, but as we can see, even as back as far as 2014, it's literally just gone down and down. We have the odd up, like in 2015 it looks quite good, it was doing quite well, but then as we can see it started to fall and fall and fall, and in the last year it's actually shown to have fallen 39%. So for me, I don't see this as a great investment at all. In fact, to me this is one where it looks really good on the face of it, but you do a little bit of digging and you realise that the risk is quite high. So a quick look at the financials, and we can see that most years the total revenue is actually in minus numbers, so that isn't something to fill me with confidence to start with. And as we go down, we look at the gross profit, as we can see again we're in minus numbers. And as we go further down, we look at net income after taxes, and again minus 148 million, minus 44 million, minus 16.8 there. We have got one plus of 26 million, and that's about it. So not really one for me. It just, on these figures alone, it just does not look good. Okay, so now we're going to look at what the analysts think. Now, at first view, it looks like it's a good buy, but this is only based on the daily. If we look at the weekly, it suddenly goes into a sell, and if we look on the monthly, it becomes a strong sell. So basically, if you purchase it one day and sell it the next, you might do quite well if you get it on a dip and then sell it when it goes up. But realistically, long term, this doesn't really look very good, and for me, I won't be investing in this one. If you like this video or you found it interesting, please give it a thumbs up. If you'd like to watch future videos, please subscribe. Thanks for watching, and I'll see you on the next one.